Hey, good morning and happy Friday. Today is June 19th. It is Orange Friday for my, well, I always do that for my Giants today, for those of you that are Giant fans. And it's also a big day for my Warriors as the parade's going on in Oakland. And I wish I could be there, but I'm here slaving away instead, as you can see. In any case, it's been a good week for mortgage-backed securities this week, moving up about 100 basis points so far on the week. And one of the first weeks where we've seen the end of the week better than the start of the week, and interest rates moving down by at least 1/8%, if not a little bit more across the board. And what's going on? Why is that happening? Well, that's a really good question, and I can tell you it's not due to the economic indicators. And if you look below at those, you'll see that everything is awesome, which is my little joke there. For those of you who've seen the Lego movie with your kids and know the song, you'll get a kick out of that. If not, click on the link and enjoy the video. But what we're seeing again is this continued trend of really positive economic data. And as most of you know, that's usually bad news for interest rates as money moves away from the safe haven of bonds and into stocks, causing rates to increase. However, there are a couple things going on this week that seem to have had a major effect. One of those was the FOMC, that's the Federal Open Market Committee meeting, and after the release of their notes, there were no surprises. Well, no surprises for Wall Street is a good thing. And even though these notes are always a bit vague and ambiguous, most of the market makers seem to believe now that we're not looking for the Fed to start increasing interest rates until perhaps the fall. So that had a positive effect on mortgage-backed securities, and an old story that's reviving or rearing its ugly head, and that's the situation in Greece, and whether Greece is going to accept a deal with the European Union Bank to start paying back its debt, or whether it's going to go into default. If it goes into default, then the concern is whether they kick Greece out of the European Union, which most speculate will happen. And then if that happens, what is going to, how is that going to affect the euro? And more importantly, the economy in Europe overall. So that fear has money moving into the safe havens of mortgage-backed securities and treasuries, and for that we're seeing a nice little improvement in interest rates. So enjoy your weekend. Hopefully you get out to the parade today in Oakland, and we'll be talking with you next week. Cheers.